campaign, okay, please encourage them to join for this afternoon session, because after today's session there won't be any more coming already. So do help us to inform your friends accordingly. Yeah, so we have 206, okay, 206 online already. Okay, so we will start for now. Okay. You see, actually, since the launch of the campaign MGC 2.0 on 1st of April, I do receive some agents' inquiries and, clarification required lah. Because now got 2.0. Earlier one, let's, term it as 1.0. So because we had actually launched the first version of MGC. MGC stands for Medicat campaign. So we launched the first MGC campaign on 19 January. And it was until 28 February was the first batch. Then we had a second batch on 1st March to 31st March. So altogether 2 batches. So there wasn't any add-on customers. It was just, reduced listing. So just to share with all, in fact, this campaign was also very good response. We have more than 10,000 cases submitted and close to 25 million sales based on the January 19 until 31st March sales. And after that, yeah, this is the one that I need to clarify, okay, because I got agents also don't know like which is which. Okay, so this is still 1.0. 1.0, we call it a refresh batch 3. So batch 3 also the campaign period is from 1st April to 30th April, where Medicat campaign 2.0 is also 1st April to 30th April. So that's why, yeah, they a bit confused lah. So this one now should be better already. More or less they are clear already. So for this 1.0, MGC 1.0, this is a refresh batch, which it was actually so-called recycle from the earlier 2 batches customer. And actually a lot of the customer that previously selected, because of they do not meet the selection criteria anymore, so we will have to so-called remove them. So in the refresh batch 3, they are only left with 223,000 selected customer. So the batch earlier one, it was started with 400 over thousand, then reduced a bit, and now is 200 over thousand customers. Still, your customer, if they are selected in 1.0 version, please go back to them and or if, because I got feedback from some agents that received, there are a lot of customers selected, so they don't have time to follow up. So now this another 1 month for you to follow up with the batch, so-called the 1.0 customers. So what okay, so this is on 1.0. So what about they are also existing customer with lower annual limit, because the 1.0 target selected customer were actually with higher annual limit, like 660,000 or even 990,000. So we also got feedback from the agents that, what about those that also need to, increase their annual limit, and they were not selected in the 1.0 version. So this is why we hear you, and we also take care of this customer. There are about approximately 120,000 loyal customer. Okay, and this is what we are referring when it comes to 120,000 customer, is referring to the Medicat campaign 2.0. So these customers, they are loyal with us. They are having our medical card for years, and some of them have probably a substandard life with at inception accepted with some exclusion condition, and they also had moderate claim experience, and they were not this group of loyal customer. Just to refresh, they were not selected in the last year level up campaign. Never. Even the value up campaign, also never. And this time, yeah, and they are having low annual limit. And this, the Medicard 1.0 also never, not selected. So now, we select them for 2.0 lah. So this is very lucky. At least, finally they are selected. Finally. Sorry. Okay. Okay. So in fact, out of the 120,000 selected in Medicard Campaign 2.0, 97% of them, that is 116,000, are having 120,000 annual limit and below. So and these are the customer that they really appreciate and appreciate this campaign, because without once they are selected, they do not need to go through underwriting, and they are actually being offered with 500,000 annual limit, right? So that's why I got agent very excited, and because they say the closing ratio is high, most of the customers selected, probably like at least 30 to 50% will take up lah. Okay, so let's look at what are some of the profile lah. In fact, okay, let's say based on this 116,000 selected leads lah. We zoom in and check their so-called profile lah, and claim experience or whatever. So we categorize them under moderate claims if they have moderate claims with GE under their medical card. Okay, so under the existing medical card plan status, that means the old medical card, if their status is standard life, no exclusion, no loading at all. Okay, so because now throughout the years, they already claim under their existing medical card. So if they got to come in via new business, very likely the possible underwriting outcome will be imposed loading or exclusion, because they already claim. So company have the record that this person claim what lah. So if it definitely come to new business door, will impose condition either loading or exclusion. And on top of that, the second group are those that when they enter using years before, when they enter by buying the old medical card that time, they are already a substandard life. That means they probably already have exclusion or loading. So if they could to come in new business door now, okay, which I think some of you got try for your customer also, right? It will very likely the possible underwriting outcome will be even a higher loading or more exclusion, because they come in last time already substandard. Then some more they claim under their medical card. So this will likely be the underwriting outcome. Okay. And for those that they only claim minor or even no claim, like small claim lah. This one moderate means higher than minor lah. Okay. Where this one minor or no claim means they never claim under their existing medical card, or they only claim few thousand, few hundred or whatever. Okay. So if they are under standard life, okay, the possible underwriting outcome will be also standard. So this one also they so-called they have the option to come in under new business door lah. Okay. However, for those that under substandard life, which they already have loading, already have exclusion under their old medical card. Okay, so if they got to come in via new business door, it will be very likely same loading or same exclusion applied. Yeah, that one definitely because like we always say when last time your customer already comes in substandard, then now we offer higher limit, cannot become standard one, right? So because it's even higher limit, so the same loading and the same exclusion will carry to MGC 2.0. Okay, unless they already appeal and manage to waive the loading and exclusion throughout the years lah. Okay. So for these customers, they are mostly underprotected. So what was actually holding them back, holding them back from upgrading? Because before it is too late. So it could be due to they think that no need lah, they will just stick to their existing medical card, or probably they think it's no agency, I can upgrade later lah, later, or they're no longer healthy anymore, which they probably develop some condition throughout these years. So if to got to come in via newbie, may not be able to pass through the underwriting, or they wish to enroll hassle-free since paying for so long. That's mean they want to buy and they are keen, but they hope that underwriting can be waived lah, something like that. So this could be some of the reason that they hold them back lah. So with that, this is also we look into this customer medical protection needs, and yeah, this is if they are really selected under 2.0 is a very good opportunity for them to upgrade. So this is only for 1 month. Today is already 10 already, so another 3 weeks only to go. Okay, which if they are selected now, and I believe they are first time selected under our GIO medical campaign since last year or whatever. So they are not selected. So this is the first chance lah, So yeah, okay, let's go through. So this group of 2.0, this group of selected customer, they are also being offered with, of course, the basic plan is SPYE, Smart Protect U exclusive, and the BSA is fixed at 6,000. So in fact, it's the same as 1.0 lah, the basic sum assured. Okay, when come to the medical rider that being offered, okay, is slightly okay, it's either SHPE 2 or GMBE 2. So deductible also same like version 1, which is 20,000 deductible. 1.0 also 20,000 deductible, right? Okay. Then the only difference is they are being offered 500,000 annual limit instead of 5 million annual limit under the MGC 1.0. So please have a clear understanding on this. Everything else remain the same. The features, the benefit, the pre-existing exclusion, everything else same for MGC 1.0 and MGC 2.0. The only difference is annual limit. Because I also being asked by many agents this question. So let's rest assured, everything else remain the same except the annual limit is 500,000 instead of 5 million for 2.0. Okay, so take note. Okay, so and please I know that a lot of time also we need clarification. We need to make sure a lot of things. Okay, some of you, if you also if you raise question in the chat box, my colleague will try to help to answer lah. Otherwise, no worries, because we have compiled since the version 1.0. We have compiled very comprehensive FAQ for this campaign. So 2.0 and 1.0, the FAQ are similar. It's just the annual limit different. So you can refer to this FAQ, which is under ePartner. So it's available in ePartner under this pathway: product, investment link product, update and campaign. And you look for campaign and Medicat campaign 2.0. FAQ as of 1st April. Please make sure we save a copy. Even better, you print it out and read from page 1 to the last page, because we included 25 scenarios, claim scenarios in this very comprehensive SBDU. Sorry, this FAQ. So it is a very good material for you to refer as and when you need, better clarification and understanding about this campaign. Of course, today's session we will touch a bit of a few common ones lah, but because the rest of the questions is there, do read through, and if you read through one round also not enough, read through 2 rounds, 3 rounds. So please, go through that. And on top of that, good news, right? We actually, marketing site actually released a new campaign yesterday with a circular and this marketing flyer. This is a 100 ringgit cashback campaign, for MGC 2.0 lah, MGC 2.0 customers. Okay, so it's a small token. It's 100 ringgit cashback for the customer, but it's also a small appreciation because of their loyalty, and it's also to encourage urgency to sign up. Some customer need sweetener to sign up. So we've marketing launched this campaign. So it's 100 ringgit cashback, and it's only limited to 5,000 policies, because this 2.0 submission or campaign period is from 1st April to 30th April. And there is an enforced deadline also, is 15 May. So submission must come in by 30th April and enforced by 15 May. So because this one no underwriting, I suppose it very fast will get enforced. Just pay and it will enforce. Okay. These are some of the, do read through the flyer or the circular for T and C and all. But of course, I screenshot this because I think you would like to know when the money will be, credited to your customer and all, right? Yeah. So the policy holder, okay, must provide bank account details, because if for company to direct credit the 100 ringgit to them lah. So these bank account details need to be provided, the direct credit facility form, to the company by 31st May. So this one take note. Okay. And for all eligible policy, the campaign reward will be credited to the policyholder nominated bank account no later than 30th June. Sorry. Okay. And do take note that if the customer did not provide the bank account by then, 31st May, then the campaign reward will be used to purchase unit and credit into the policy TIV . So take note on that . So it's also a very straightforward campaign . 100 ringgit cashback. We waited, because got feedback. Why the Samsonite Cuti challenge, the other counted, this campaign production not counted. Okay, because we are going to review, there's another campaign will be counted for customer who purchased this campaign during this campaign period. And so this is about the 100 ringgit cashback . First 5,000 only, so must be quick also. Okay. Okay. So let's let's go through some of, the selection criteria for this 2.0 for your understanding . But of course, cannot appeal also if after you find that why this customer fulfill all these criteria but the other selected so memang if don't have not selected means cannot buy it will have to go through new business so cannot appeal also okay. So these are Malaysians, okay, non-premium wave status, no CITBD claim, their attend age is below 69, and they are either standard life at inception, accepted without condition, without loading, or substandard life at inception, accepted with condition or loading. Sorry, this one is a policy under enforced status, with loading less than 50%, I mean 50 or less, and or with exclusion. So these are generally the selection criteria. And of course, is the lower overall annual limit lah, like 97% are below 120,000 annual limit. So the eligibility similar like a 1.0, okay? If it's a standard at inception, or substandard at inception, it will depends on which rider being offered. I mean, how to determine which rider being offered to customer. It will depends on their current the existing medical card, whether got claim before or moderate claim lah. So it's if it's an under claim or minor claim or only accidental claim, okay, this group of customers, they are being offered either SHPE or GMVE. So that means they can choose lah. They have an option to choose SHPE or GMVE. Where for those customers selected and they actually already have other so-called moderate claims lah, non-severe or non-major lah, definitely is non-chronic or CI related lah, they can only go for GMVE. So very strict. How do you tell? Of course, for ePartner screen, you will be able to see these key customer are being offered which, and on top of that, on the customer offer letter, it will also have difference, which I will show you that lah. Okay, so again, everything else like same as in the benefit and all. The only difference is the annual limit, 500,000 for Medicat campaign 2.0. Okay, so again, as mentioned earlier, any existing impairment, like those that when they accepted their old medical card last time, if already have health loading or exclusion, the same loading or exclusion will be carried forward to the SHPE or GMVE. Okay. Okay, so these are generally the list of medical riders or standalone medical plans that customer are having that is selected under the MGC 2.0 lah. So is in fact is the complete list lah, should be the complete list lah on the or whatever the lower annual limit one lah, and it's a withdrawn riders lah or withdrawn standalone lah. Okay. Okay, I think Nicole also helping to reply question. Thanks for that. Okay, so this is this one, the SSPE or GMBE. This one important. Okay. All benefits remain the same. We refer here remain the same means as per the 1.0 version, except for annual limit. So 500,000 to start with without underwriting and no lifetime limit is actually a very good offer to this group of customers. So I actually so far I actually heard from agents that this is like the best offer that this group of customer can get lah, because there's no underwriting, no waiting period and all. So many agents already closed many cases lah, under this MGC 2.0. So other than that, of course, the rest of all these are actually referring to the benefit under GMV or SHP, where most of the old, probably some or most of the old medical card that they are having, those withdrawn one, like the earlier slide, do not have this benefit. Like new outpatient coverage, and like outpatient imaging, all this lah, outpatient treatment, the 8+4 illnesses, the outpatient illnesses, outpatient treatment, enhanced post hospitalization benefit, all these are actually covered under GMVE and SHPE or SHPE. Coverage for the cost of blood and plasma, coverage for communicable disease required quarantine by law, coverage for congenital condition or deformities manifested or diagnosed on or after life assurance attains 17 years next birthday. And for GMVE is the wellness bonus. So so on top of the annual limit being expanded, right? After they add on this second medical card under MGC, these are also the enhanced benefit that to enhance their existing old medical card with this additional benefit. So this actually adds value on top of the old medical card. Okay. Okay, so all benefit remain the same. Okay. And also in terms of okay. So how it works for MGC 1.0 or 2.0, it is basically sorry, before that. Okay, so it's basically works as a second medical card. Is strongly encouraged to keep the existing medical card. Why is that so? Because by keeping the existing medical plan is important to cover the pre-existing condition, which I will go through that on later. Okay, because there are conditions that develop during this interim period. What is this period about? Is after the old medical card in force and now before the new medical card. So there are conditions developed. So we call it pre-existing lah. So their exclusion for either full exclusion or 3 years exclusion, which I will go into that. Okay, and claims are made under the existing medical plan will be able to offset the deductible amount. So you see, because this both riders option are the 20,000 deductible option. So the customer will still have to self-pay the first 20,000 if they do not keep their existing medical plan. So hence, it's important to keep their existing medical plan to take care of that. So by combining both together, so the deductible can claim under the old medical card. Okay, let's go through again where to check customer listing, which I hope you already done that lah. But anyhow, I'm going through here. Okay, is to is to click on the other departments. Click on other departments. Go to StarBuddy. Okay, all the customer selected campaign, all the GIO one must go to StarBuddy one. Because it's actually arranged by marketing department. So there are two Medicard campaign here, right? You see got two links. So the first one, Medicard campaign, refers to the 1.0 version, the refresh batch 3. Those customer left with 223,000, right? They are still eligible for the 5 million annual limit. So it's different, Okay, and now the other link is the Medicard campaign 2.0, which is the 500,000 annual limit group lah. So after you click on Medicard campaign 2.0, okay, so this is where you can check who are the selected customer. So click on view customer list, to view the selected customer lah. So they will show the list of customers selected lah. So you can download the offer letter also and send to your customer lah. Selected customer. So this is what I mean by how to check in ePartner to see this customer is being offered both or one only. Okay. So yeah, like for example, this first customer earned something, right? So this customer can actually go for either SHPE or GMVE. Whether there's also an exclusion indicator under the existing medical card lah. And this is sorry, let me go through the yes. So amount to be used to generate quotation as a reference, because this amount is actually is a sample premium that is based on 100% Lion Fixed Income Fund, or 100% Lion Fixed Income Fund. So a common question also asks, can I do a quotation and submit other different package, maybe different fund or whatever, where it differs from this premium? Of course can, as long as can pass through the quotation. Okay. So because our recommended premium here is based on this package and model, this package law, Lion Fixed Income Fund 100%. Okay, and next is on the follow-up status after approach customer. Okay, before that, so agent do update the follow-up status in the customer listing for tracking purpose, so that it's also know that whether for your follow-up lah. So there is a new link here, is under the follow-up status link lah. Once the status is updated, then you click save. Okay. And what else? Okay, so this one, and this is also an indicator, a very useful indicator for you to use, to refer, because apart from you visiting the customer to share on these customers being selected under the MGC campaign, we also take the opportunity, since your customer gave you appointment already, right? To use this opportunity to review your customer protection gap again. So whether your customer still has gap on life protection or CI coverage, right? So this is where you can actually refer for any cross-selling opportunity. Say for example, this the BSA that this customer already have is more than 500,000 with Great Eastern, and maybe there is an opportunity, and also there is a need to upgrade the CI coverage, because the critical illness sum assured is still below 100,000. So we have many good CI product that GCCR campaign or whatever got 50%. So please leverage on this meetup for cross-selling opportunity, right? So this is why we have this campaign for you as a door opener to approach your selected customer. Please make sure you bring another quotation, not only MGC quotation, not only MGC 2.0 quotation, the SPYE. You also bring your legacy quotation or whatever to get ready. Who knows, you can close 2 cases, 3 cases in the meeting, in the appointment. So this is the offer letter that mentioned, is about if the customer is selected under both SHPE or GMVE, then the offer letter will be like that. The table in the middle will show both we show both SPIE plus SHPE, what is the difference, and SPYE plus GMVE. So this one, SHPE no wellness bonus, no need to comply TGJ pathway, not subject to TGJ pathway, where GMVE got wellness bonus and need to go through TGJ pathway. So for the customer that only being offers GMVE, then it won't have the SHPE column there. If you only have the GMVE column. Okay, so this is just to show you the difference between the two for the offer letter. So for you, how to check and assist customer? Especially, let's say, okay, your customer want to download the offer letter, so via eConnect. So you can assist your customer to log in eConnect to check and retrieve their offer letter under My Document Important Notification. And also for those customer, of course, this offer letter you also can download from your ePartner. But what about those that customer you came across that is not under your servicing, and you want to help them, to help them to check whether maybe they already lost contact with their agent, they don't have an active servicing agent anymore. You can help them to log in eConnect and retrieve the offer letter. So this is where lah, to download the eConnect, because it's not available in your ePartner under important notification. Or of course, some customer may not have eConnect access or whatever, or you want to help them to check whether they are selected under this campaign, MGC 2.0 or even MGC 1. Okay, it's the same link as same as the last time 1.0. So you can keep this. I mean, you can scan this QR code and save in your phone the link, so that you can help your customer to check whether they are eligible by only enter their NRIC or birth cert. Okay, so it's the same link. Okay, so once you key in, if it say eligible, okay, you are eligible, because that is a corporate website link so it's for the customer law. Okay, so you are eligible for Medicard campaign 2.0 or Medicard campaign that is for 1.0 lah. So, and is also the link actually enhanced with even with the sample premium, the recommended premium. And if it say SHPE and GMVE, means your customer selected can buy both, and the deadline is 30th April. If so it will show 1.0 or 2.0 lah. And this is based on fixed income fund as mentioned. And kindly contact your agent. Okay, so submission procedure same like version 1.0. Is via newbie, MPOS, once pay premium in force if it's a standard at inception. If it's a substandard at inception for under the old medical card with loading or exclusion or whatever changes in whatever smoking status and whatever, so it will require customer to sign letter of conditional acceptance, LCA. And if there's loading imposed, so there will be additional premium to be required to pay. So it's still imposed. Okay. And now we can, so this is the sample quotation, which I think you can do it yourself. To take note, when you see the rider code here, SHPE 2-20-500. The 500 is the annual limit indication. So meaning this is the 500,000, which is under 2.0. So take note on that Okay. Okay. So under the MPOS, so this one is SI Okay. Okay, SAO this remain for SPYE. Okay, this is like sample LCA. Customer with loading imposed in the existing plan. So the same loading, or if the same loading will be imposed to the new GMVE, I mean the MGC 2.0. Which can the loading from the LCA you can see here is GSR grade 7 rider 610. So monthly premium is 150. So plus the loading GSR 610, then it is 156.10 10 cent. So this is the total premium to pay to enforce the policy. Okay. Final payable premium and the step-up premium. And this is the health loading under the LCA there. Okay, for MPO submission, please pay attention. Okay, MPO submission because I also receive a lot, now better already now. The most question that ask they can't find where is the 500,000 annual limit option. Huh? Okay, let's see. You for this campaign under MPOS must choose campaign. Then SPYE. Then after you choose SPYE, so the sum assured is fixed loss 6,000. And this is where you choose the rider. Okay, take note. For MPOS quotation stage, we don't have validation on whether this customer, once you key in the IC number, is it automatically it will show only can buy SHBE and GMVE, or sorry, can buy both or either one. Under submission and under quotation stage, there's no validation. So make sure you select the right rider, especially for those that only selected for GMVE. You must select GMVE law, because if you select SHBE, it's not valid law, is not relevant, because when you submit, it will be withdrawn, because this life assured is not, it's only being offered one rider, which is GMVE and not SHPE, right? So this one take note. So if it's not, then you close the SHPE and open the button GMVE. Yeah. And secondly, the very common question also asked, is it where to find the 500,000 annual limit? Because we're not familiar. Usually the room and board here, you all don't drop down. So this is where we can choose which annual limit option under the room and board sum assured column. Okay, the first one is room and board 220,000 deductible. This is the version 1.0, which is those that being offered 5 million annual limit. If it's referring to MGC 2.0, we must select the second one. Select the eligible rider, make sure you submit according to your customer eligible plan. Otherwise, even you pass through quotation, it will turn withdrawn if you select the wrong one. Then you have to do over again, right? So under here, please make sure you select the second one if it's under Medicard Campaign 2.0, because to differentiate it, there is a bracket here 500,000 annual limit. Okay, please share with your friends because this is also a very common question that being asked. So choose the right one. MGC 2.0 is only 500,000 annual limit. Cannot choose this one. Okay, it's this one. Okay. So make sure you submit according to your eligible plan. Otherwise, have to go over again. It will turn withdrawn and all. And okay, so is this proposal intended to replace existing policy? So select no, because this works as a second medical card, so must maintain the existing medical plan. Okay, then have you surrender or terminated? So it depends If no means no in the past 12 months. Okay. And a warning message if okay, so must if it's a yes, means it tends to replace then we'll have pop up this warning message and have to complete the MMC form if fill up as per existing procedure. And under the MMC, just click through. Okay, maintain the existing. So MMC is the multiple medical plan. So your customer to keep both multiple medical plan. So mandatory to complete to maintain the existing medical plan. So please make sure we click in and fill up this multiple medical card by keying in the correct existing medical plan policy number. I mean the rider or the ILP or standalone. So please make sure we key in the same or correct policy number. Because I have agent got mentioned the customer already have 2 medical card, then now buy this one as a third one. So the 2 please make sure we key in the one that is selected in the ePartner which is the O1 the O1 I mean the O1 the existing medical plan, you just follow the ePartner number. Okay, I agree then sign submit Okay, so for 1.0, okay, that is 2.0, so I'm done with 2.0. Now just to refresh a bit of 1.0, like mentioned, it's a refresh batch 3 now, and it's left with 223,000. So since the batch 1, they already more than 200,000 no longer eligible. So please go back to this customer if you think this customer still have intention to take up So it's also by the 30th April So you choose Medicard campaign is for the 1.0 version. You choose Medicard Medicard campaign 2.0 is for the 2.0 version. So this is the 1.0. Just now got show you also, right? So this is where. So same It's just different customer, different annual limit offered the annual limit is 5 million so sorry, this is the existing policy number that when we submit under the multiple medical plan, policy number must fill in this existing policy number. Okay, also update the follow-up So I think some of the agents still haven't finished, meeting all these 1.0 customer because they have a lot of customers selected. So only 1-2 months not enough time So now got good got refresh batch 3. So this one is also the offer letter similar and sorry, here you can see the annual limit is 5 million Just now the 2.01 is 500,000 now comes to the pre-existing clause. Okay, this applies to both 1.0 and 2.0. As long as it's under Medicard campaign, it is subject to this endorsement and under the pre-existing illness exclusion. So pre-existing illnesses, category A and B. Okay, under the category A, okay, disability or condition related to 50 critical illnesses. Take note if the disability or condition are related to 50 critical illnesses, spinal disorders, or diabetes, and its complications that have been diagnosed, disclosed, or claimed prior to the risk effective date of the new policy, it will not be covered. So this is forever. That particular CI or this spinal disorder or diabetes and complication will forever not cover under the new GMVE or SSPE. So the new policy will not be covered is stated here Okay, and for category B, for the other pre-existing condition not listed in A above, means those that not fall under already 50 critical illnesses. Already means, for example, cancer for CI definition is advanced cancer if it's carcinoma in situ or cyst lump those are fall under category B. Okay, so the coverage will be excluded if the condition have been diagnosed, disclosed, or claimed prior to the risk effective date of the existing medical plan or riders. So this one is if the before old card already have, then this so-called exclusion will carry forward to the new card or if the condition is only developed for the first if it's not pre-existing under the existing medical plan, but it developed after that, so then it's excluded for 3 years So for the 3 policy years commencing from the risk effective date of the new policy, where such condition have been diagnosed, disclosed, or claimed at any time from the risk effective date of the existing plan or riders up to the risk effective date of the new policy. So coverage for this condition shall commence from the fourth policy onwards. So it means it happens during the interim between after existing medical plan in force and before this new policy effective law. So for those that pre-existing condition, so for 3 years, it will not be covered under the new GMVE or SHPE, where it will be covered after 4th policy years onward. We go through some scenario later lah. So okay, so this is a fair clause under pre-existing, because no underwriting and these people, especially category B, they already have condition. If they come in under new B law, forever that particular condition will be excluded. Now we only exclude 3 years. Okay, fair, right? Okay, next. Okay, okay, so this is under the endorsement clause. Okay, and so yeah, this is the example on the under the sample policy contract. This is the definition for the example cancer definition under the 50 CI. One of it is cancer, right? So the cancer definition here is referred to specified severity and does not cover very early cancer law. So that means this cancer already become advanced lah. Then only is considered as 50 CI punya exclusion. If it's a not advanced cancer, or it's only a polyp ke, cyst ke, fibroid ke, all those is under others. So exclude 3 years. Okay, and this is spinal disorder definition. It refers to any disease or abnormal condition of the vertebral column, all this lah. So it's available in the sample contract. And for diabetes, it refers to a chronic metabolic disorder, all this lah. So it's already diagnosed diabetes lah. Either both type 1 and type B. So a diagnosis of diabetes mellitus must be confirmed by a physician and substantiated by a definitive diagnostic test report. All illnesses, take note, all illnesses or complication directly or indirectly caused by or related to diabetes are not covered under this policy. So take note about diabetes exclusion definition. Is basically refer to all illnesses or complication directly or indirectly caused by diabetes. So here, I think 11 already. Please allow me to have more time, because maybe another 10-15 minutes. So please stay with me because I'm a bit chong here. Long-winded. Okay. So let's we included a few scenarios in the slide, but as mentioned, do go through the 25 scenarios in the FAQ for even other scenarios. Okay, let's say scenario 1 in 2016. This life assured, covered under Smart Medic Extra, purchase Smart Medic Extra. Okay, and in 2024, in year 2024, admitted to hospital due to brain surgery and claimed under other insurance company. Since Great Eastern no record then we select let's say we selected the customer and under Medicard campaign 2.0, and the customer purchased SHPE. Got selected SHPE in this campaign 2026. Number 1, you see this brain surgery developed between this period. So it's considered pre-existing, right? And brain surgery is actually CI, one of the 50 CI. That's why if this person admit to hospital due to brain surgery again next year, okay, SMX that will continue to cover, but SHPE it will not be covered brain surgery at all forever because it's fall under 50 CI exclusion. So that's why it's fallbacks SMX lah to keep the SMX to cover this CI pre-existing. Okay, scenario 2. In 2005, purchased SMX. 2015, diagnosed with carcinoma in situ and has not made any claim before. Okay, so carcinoma in situ is early cancer. Okay, and now because no claim from us, so they are selected. The customer is selected under SHPE MGC 2.0. And this customer admitted to hospital due to carcinoma in situ of the breast in 2027 after next second year lah. So SMX will cover, but SHPE if will not be covered because this carcinoma in situ is fall under other pre-existing non-CI, so it's exclude 3 years. So now it's only 1 year. That's why this admission will not be covered under SHPE. Okay, okay, scenario, sorry, then move on. In 2030, if this person admitted to hospital due to breast cancer, assuming the carcinoma in situ of the breast progresses to breast cancer in 2030. So do you think SMX will be covered? Of course, yes. What about SHPE? It's already more than 3 years, it's 4th year, right? So SHPE also will be covered under this scenario because this CI occurs after SHPE risk effective date. Before the SHPE risk effective date is non-CI pre-existing. As long as before SHPE in force, that is under non-CI pre-existing. After 3 years, even though it becomes CI, SHPE will also cover, but must be more than 3 years lah. For that progress to a CI case. Scenario 3, 2016 purchase SMX, 2024 admitted to hospital due to angioplasty and other invasive treatment for coronary artery disease and has not made any claim. So in 2026 purchase SHPE. 2027, okay, because no claim, so we select admitted to hospital due to coronary artery disease by way of coronary artery bypass grafting. Okay, so of course, this one SMX will cover, where SHPE will not be covered because it's under angioplasty is under CI, one of the 50 CI, although it's only like the 10%, the one, but it's under CI illnesses exclusion. So it will not be covered forever for SHPE. Still got scenario 5. Okay, 2005 SMX, 2015 diagnosed with diabetes already. This person already diagnosed diabetes, but no claim lah. 2026 we select and purchase SHPE. 2030 heart attack without open heart surgery, and according to doctor's report, it is related to diabetes based on doctor report and medical evidence. So SMX will cover. SHPE will not be covered because it's under pre-existing diabetes, and anything to do with diabetes directly or indirectly, it will not be covered forever under the campaign. So this scenario is diabetes and from the report already say it's related to diabetes So in 2035, second heart attack without open heart surgery and it's proof that it's not a progression from first heart attack, not related one, and is also not due to whatever diabetes lah, then it will be covered because it is considered other pre-existing law. So, and it's more than 3 years law, it's 10 years, okay, so please go through the scenarios. 2010 to the scenario 5, 2005, purchased SMX, then did blood test and diagnosed as pre-diabetic. No treatment and medication. It's only pre-diabetic. In 2026, SHPE purchased. 2035, diagnosed with diabetes with amputation surgery due to diabetes-related complication. So it's progression from pre-diabetic based on doctor's report and medical evidence. Okay, SMX will be covered and even SHPE. Because this pre-diabetic is not diabetic. So it fall under other pre-existing. It's not the pre-existing for diabetes. Because pre-existing for diabetes forever not covered, like the scenario 4, the first admission, where this one is others pre-existing because it's only pre-diabetic, so it will be covered after 3 years. Okay, so scenario 6, 2016 buy SMX, 2024 admitted to hospital due to hemorrhoid surgery, 2026 purchased SHPE, 2030 admitted to hospital due to hemorrhoid surgery. It's the same pre-existing lah, Okay, what about this? SMX will be covered, definitely, and SHPE as well, because hemorrhoid is not the 50 CI pre-existing, and it will be covered after 3 years. This one 4 years already, got 4 years, right? So that's why both also covered. But still got scenario 7, SMX, SS 2024, diagnosed knee degenerative and excluded under other insurance company, but we select it because it's sorry, that means in 2026, let's say this person did not selected but did not take up MGC 2.0 for whatever reason, next year wanted to buy SHP. What do you think will be the underwriting decision? It will be excluded on knee degenerative condition, which forever will exclude lah if come in via newbie, right? But with this campaign, if the customer rewind back and sign up for MGC, knee degenerative will be covered after 3 years if the customer grab the opportunity. So these are the other FAQ. Please read through. Please read through the pathway I already gave you earlier in the e-partner deck. But one question that I want to address here is under medical claim 44. So because this is also a very common question. Okay. So once the new GMBE or SFPE enforced, how do my customer utilize both existing medical plan or riders and the new policy in a single medical claim event? Because customer keeping both, and we mentioned that it's important to keep both because the old card can take care of the co-insurance and deductible under the GMBE or SHPE, as well as those pre-existing. Okay, so there are two scenarios here. If the customer choose to utilize existing medical plan first, that means use the first card to apply GL. So once the limit read through, okay, this one 44 very important one because the most common question asked once the limit under the existing medical plan or rider has been fully utilized, customer may continue claiming any remaining eligible expenses under this SHPE or GMVE. That means the annual limit exhausted already. So remaining one, if you're not required to go through pay and later request for reimbursement, for the deductible or co-insurance upon discharge, even though that is a GMBE or SHPE with deductible or co-insurance, because of this statement. Item claims under existing medical plan or rider will be automatically deemed as fulfilling the deductible and core insurance of the new GMBE or SHPE. The most question asked is, if using first card then enter did not follow the TGJ pathway then enter also a non-TGJ hospital, but is using first card. Then mana tahu the limit not enough continue to pay to claim the remaining from GMVE example. Then over there got 20,000 deductible. Here already says automatically deemed fulfill even though core insurance 20%, akan we ask the customer go out again from the hospital and come in, go through the pathway so no need, no need, because it's already fulfilled. Okay, if let's say it's using existing, the new SHPE or GMVE first, so the deductible and core insurance will be automatically claimed under the existing medical plan. So customer also no need to pay the first 20,000 deductible. And if let's say did not follow pathway, another deductible 20%. Because HST, they will do coordination of benefit. They will actually calculate and coordinate the deductible and core insurance to be automatically claimed under the old card. Also, this is documented in the FAQ. However, the claim and discharge process may take longer because of all this coordination of benefit. It needs time for HST to check through all the details and also make sure that particular admission is again subject to the benefit limit and T&C of the new card particularly on pre-existing What I mean is make sure if this so-called seamless seamless claim provided the admission or the illness is fall under something that GMVE or SHPE will cover means it's like not due to pre-existing or whatever. Okay, other FAQ, please read through so because it's already late so I won't go through, but more or less already covered in the earlier slide Okay, so this is a summary of the benefit of GMBE and SHPE So everything else the same, is just the annual limit different. 1.0 is 5 mil, 2.0 is 500,000. All these other same go to GMBE. Okay, and the pathway requirement under the GMBE So there's also this document available in ePartner. You can refer for a quick, simple comparison or overview comparison between the old card and the new SHPE and GMBE Also, I won't go through also You can download from ePartner. It is quite many pages because we compare all 12 products here. But it's a high level comparison the schedule of benefit combination for your reference is very good to refer also for simple reference Okay, let me see so this is where you can download this document from ePartner. This is the pathway. It's also under product, investment link product, update and campaign, Medicard campaign. So it's fall under the 1.0 earlier because we developed it earlier So this is the document overview of GMBE, SHPE, and 6 withdrawn standalone and 6 IL medical plan or riders. Okay, summary. Last MGC slide summary Batch 3 is refresh, 5 million annual limit. 2.0 is new one and is 500,000 annual limit. So of course, as mentioned, if you have the opportunity to meet your customer, do also find opportunity to cross-sell. So our GTG also just come back, is from 1st April to the 31st May. So these are the 5Gs lah, guarantee acceptance for no medical underwriting, maturity benefit, all these GTG benefit lah, accidental death benefit up to 300% BSA, and guaranteed premium rate. So it remain level throughout the policy term and is guaranteed. And the other G is guaranteed standardized rate for all occupation class smokers and non-smokers lah. Sum assured minimum 10,000, maximum is 100,000, and if if death happen between 45 to 64 years old, it will be the maximum under the death benefit is the maximum of basic sum assured or total premium paid. If it's an accidental death plus additional 300% BSA. If death happen after 65 and above, the basic is higher of BSA or total premium paid plus additional 150% BSA. So that means the ADB lower lah, than before 65. Okay, so premium rate are level throughout the term and is guaranteed. Guaranteed means it won't increase, it won't reprice. So standard price for smoker, non-smoker, standard rate, no underwriting. So this is, I think it's the last slide already. Thank you for staying until now. Okay, so again, take this opportunity as a door opener opportunity to actually help the customer to also increase their coverage for other gap like life or CI, or even we have the new product, great retirement plan, whatever you think that is suitable for customer to take up. Yes, please leverage on this opportunity to cross-sell, because without this campaign, your customer may not want to meet you. Let's say no time whatever then with this campaign, is a good so-called excuse and door opener opportunity. Since you already secure an appointment, myself, maximize the chance to cross-sell, so that you can bring back more cases. We have a lot of success stories that meet customer with this campaign only. Then after that, propose other plan and manage to close. Okay, so lastly, I think it's already 11:20, so I will end here, but I will show you the pathway to download the FAQ again, because I saw someone ask, because it was actually mentioned beginning of the slide lah. So this is where I mentioned the comprehensive FAQ. We have 25 scenarios covered under this FAQ. Just now the slide only covered 6 or 7 scenarios. This one 25, very comprehensive. So please download and